Glenn, today we're going to have a special show. You're going to talk to us about three major market trends in 2024. And we're going to start, of course, I think the first one being on the geopolitical front. Tell us about your thoughts on how this is going to impact markets.
Sure. Thank you, Brian. Like you said, the three major market trends of 2024 on our radar. The first is definitely the geopolitical front. So the developments in the Middle East, particularly in the Red Sea region, as it is a vital artery for global seaborne transportation. In the past few weeks, we saw the US-led coalition launching a new wave of attacks on the Houthi militants in Yemen. We also saw Iran and Pakistan exchanging missile fires into each other's borders. So this clearly shows conflicts are spiraling upwards and more countries are getting involved. And this is a major driver for lots of commodities and lots of instruments. Gold, for example, we can see gold has held up nicely above $2,000 per ounce, which is roughly at $170 premium compared to September, that is before the conflict broke out. In terms of crude oil, we are not seeing an immediate increase in price as the US produced shale oils start to arrive on shelves. So the supply side is relatively resilient for now, but the wider implication is that when the conflicts sort of really spill out into the whole Middle Eastern region, then lots of things can go wrong. So as the first trend, definitely keep your eyes open, traders, for any potential threats to come out of there.
Now, Glenn, I want to talk a little bit more about this in terms of geopolitics. One thing which is also potentially going to be impacted is really inflation, because interest rates, and we'll talk about interest rates after this, right, will obviously be impacted. But what's more important is really inflation rates, because freight rates and insurance rates are skyrocketing.
Absolutely, Brian. So that is the bigger and the longer term concern for global economy. As we've talked about this, I think late last year, that when the Red Sea conflicts broke out, the militants have been firing missiles and drones at cargo ships. So lots of these major cargo ship operators have stopped using the Red Sea route. So instead of going through the Red Sea or the Mandab Strait, the Red Sea, and going up the Suez Canal to Europe, they have gone the other way around. So going through Africa and all the way up there. So that actually increases the transportational cost. It actually increases the insurance cost, and it increases the time. And all of this combined together, it will slowly feed into input inflation for basically everyone that is involved. Probably not so much between China and Australia, we go straight down, up and down. But for global economies, that would definitely slowly feeds into it. And that becomes the inflation problem of 2024.
Now, the second thing is, of course, interest rates cut. And obviously, we've heard a lot of noise from the Fed. What's your view on this? Have markets fully priced in this behavior?
Yes, rate cuts. Great point, Brian. That's our second trend for 2024. So cuts are absolutely the forefront for all markets. We had heard from, like you said, a string of Fed speakers earlier this month, both hawkish and dovish, on how soon the Fed is going to cut. Apparently, Waller's hawkish remarks effectively killed the center rally, and also hinted a later date is more likely rather than a cut as early as March. But a cut, as Fed projected themselves in December, is certainly on the table. In fact, 3 cuts are most likely. So currency, commodity, equity markets will be actively following this, and they'll be actively pricing in this as more economic data is released. In our opinion, soft economic data will be crucial to a gradual easing cycle, whereas a sharp drop in economic data could sabotage the highly desirable soft landing fairy tale. So this is something investors must closely monitor.
Okay, Glenn, but here's the thing. We've just had great earnings out of Netflix, for example, stellar earnings. That's not the exception. In fact, the US economy is doing far better than expected, say, even in the previous quarter. Also, consumer sentiment is very good. So if the Fed's going data driven, the data is giving a lot of positive messaging.
That's right, Brian. Like you said, Netflix stellar results, and I believe Microsoft just broke their $3 trillion market cap as of last session. So that overtook Apple as the biggest, the most valuable company in the US. So lots of these things are contradictory to what the bears are saying. It's going to snap, or the soft landing is something that is beautiful but really hard to achieve. On the other side, like you said, the data is pointing to a beautiful, a fabulous soft landing, but a smooth soft landing. So the discrepancy will be there, and how markets and traders take these opportunities, especially given the U.S. election is already rolling, that will create lots more uncertainty and lots more excitement. So it depends on how the strategies play out, but I'm really looking forward to seeing more of this unfold.
Now, and speaking of the U.S. elections, that's your third trend, isn't it?
That's
Trump
right,
is a
Brian.
front runner now.
Trump has returned. That is a fact. Love it or hate it. If you are a big fan of stand-up comedy, you're definitely for some great talk shows from the former U.S. president. But if you are concerned about the world order and global stability, then you will probably be grinding teeth in your sleep. The smashing victory in Iowa a few weeks ago and the New Hampshire victory last night against Nikki Haley have paved ways for the former U.S. president to face off the incumbent Joe Biden. Despite all the political controversy, we're seeing Trump trades in this broad-based rally. USD index actually gapped sharply lower after Trump's New Hampshire victory. This echoes his long-standing stance on weakening the dollar while keeping the dominance. But the most important question for global investors is this: if you are a believer of Trump trades, then you will face next Thursday's FOMC, which is highly likely to keep rates on hold. And you will also face the next Republican primary, which is set to take place in late February in South Carolina. And it happens to be Nikki Haley's home state. So lots of things can still change in this 1 month window. Will markets take a healthy breather from here, given US indices are already at new highs, or will we see even more aggressive actions from the buyers as we did in 2016? These are all big questions for traders and investors out there to watch for.
Now, Glenn, as always, thank you very much for coming on the show. Thanks for your insights.
Thank you, Ryan.
Now, we've been speaking to Glenn Yin, the head of research and analysis at AETOS Capital Group. And this has been Biztech's Asian Midday Market Watch. I'm Brian Fernandez. Check out the show on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.